Our next guest regularly advises the IMF and the World Bank. He was also one of the lead architects of 2009's Vienna Initiative, which helped avert a crisis in Europe's emerging economies. It's Erik Berglof, and he's chief economist at the European Bank for Reconstruction and Development. Really good to see you. I want to get on and explore just how the crisis may be affecting those emerging countries on the periphery of Europe. But can I just ask you a general question right now? Do you think the policymakers, the politicians, the Olli Rehns, the Jean-Claude Junckers, those sort of people are getting it right now? They're doing the right things. Europe is getting on track. Or actually, are you still quite pessimistic?
I'm quite. I feel confident that now the focus is on the right things, and the measure that was mentioned last night by Olli Rehn to try to have a coordinated capitalization of the banks, I think is the right way to go.
Which countries on the outskirts of the Eurozone, the emerging European countries, are most at risk of a slowdown and a deepening of the crisis in Europe?
Yeah. A lot of the risk is in Southeast Europe because of its dependence on the Greek banks. So there, in many of the countries, you have Greek bank subsidiaries, and they are often very large and important to these economies.
Well, Bulgaria, for one, isn't it, about a third of Bulgaria's banks are controlled by Greek parents. So is there a way of shielding themselves? They can protect themselves, or are they still particularly vulnerable?
I think they are vulnerable, but we have known this for a long time. There's been a lot of work put into building sort of a firewall around Greece, and I think that seems to hold up for now, and that's a good news.
You actually believe that there is a firewall around Greece that is protecting it? I mean, you know, we just have to look at what's been happening at Dexia, Belgium's biggest bank, to actually make you feel, you know what, this is getting very close to home.
No, so what I was referring to is the subsidiaries. So I think we have preparations for the case that subsidiaries would no longer have the support of their parents. I think that's a scenario that we have to take into account. I mean, it may not be the main scenario, but it's one that we have to take into account.
And what must be also quite alarming for these countries is you've got the likes of the big French banks, the big Italian banks, the SocGens, the UniCredits. They presumably are starting, or have you seen signs that they are reining in lending, which is really going to affect growth in some of these southeastern European countries and beyond?
Well, we have had a long process after the crisis of, as we say, deleveraging in the region. So that has been going on, but there's no, as far as we can see right now, sort of acceleration of this. But I think this is, in almost any scenario you can think of now, there will be some impact on the subsidiaries of these banks.
And what kind of impact? Do you think that some of the banks that maybe the EBRD does business in, that some of them actually could go under because of the real problems of the contagion spreading out?
Well, of course, there are such scenarios where that would happen, but I think that's not what we are counting on as the most likely event now. Now it's really about figuring out which subsidiaries depend particularly on funding from the parents, need new capital. That's the kind of situation we need to prepare ourselves.
And following on from that, I mean, we've had the Italy downgrade yesterday. Do you think that some of these countries themselves may be downgraded, which makes it even more hard for them to borrow?
Yeah, you can't rule that out. I think what happened to Italy was sort of in the cards and not so. It was expected by the markets, I think.
And you're about to revise your growth forecast for the countries that you do business in, the EBRD. Is that likely to follow everybody else? You're going to be revising downwards. Is that really what your gut feeling is at this stage?
Well, it is, I think. We have to lower expectations around the world, but also in our part of the world.